Hey, good afternoon, traders. This is Trader Tim from over at eminimind.com doing a Thursday trade recap video for June 3rd, 2021. And this week we've kind of been hung up here a little bit in limbo as we're just off highs in the S&P, kind of riding the top of this box here. If we use this prior consolidation area, draw a box around that, we've sort of been sitting right on top of it. And we've got some new economic news coming out in terms of the employment situation from the last month or so, coming out tomorrow on Friday. And then not too long from now, a couple of weeks, we've got another Fed meeting announcement. So we'll see if that sort of, if we can get through tomorrow with some resolve, then we might be able to see some more movement next week. But sometimes going into some of these bigger numbers, there's like this waiting period, especially going into the Fed meeting announcement in the few days leading up to that. So today was better. We had some more movement and a couple of decent opportunities. So let's jump into that. Going to the 5-minute chart, you can see the big gap down today. Tuesday, we actually had a gap up. One thing to note is when you have a day where you're trading, the market is open. The market is closed, but the futures are open. I just kind of ignore that price data. There's basically zero volume, so it doesn't mean much. But we still had a gap up based off of Friday's close. And pretty much sell off from the open. When you have a gap up at highs, I should also mention, like this, where you have a gap up that's coming after an uptrend, you can sell those. Just like when you have a gap up that occurs after a short downtrend, you can buy those. So selling gap ups at highs, buying gap ups at lows. So if we zoom in here to today's price action, a pretty big gap to make up, although we made it most of the way here towards the late morning, middle of the day. We've got about an hour or so before we officially close today. We started off going pretty much straight down in retracements right from the open, like that, getting a little bit bigger and bigger as we go down, and then we came down and broke a short. So then you just come draw the full halfway back, like, get the right tool here, like this, high to low of the day. And let me link up my charts. So when you have a full halfway back like that, this morning, if we were to mark the high and low of the first 30-minute range, we were trading within it basically all morning until we broke out up here. The difference with today is that the range was pretty big. Look at this range, a 65 up to we'll call it an 85. So a 20-point range. And so one setup that I like to use is if we zoom in here, this is the 61.8 of the halfway back short. The yellow line is the 50%. When you break that halfway back, as we poked through here, what you can do is take the opposite setup. So in this case, the full halfway back is a short. The opposite of that setup would be a long. But rather than waiting for us to come to the next larger halfway back, you can take it on the micro. So here we had this little double bottom. Didn't really seem like there was anything it was bouncing off of, but nonetheless, this was the swing low, grabbing to this swing high. So see how the anchor point from here is below the 50%, and then this anchor point is above the 61.8. So you're kind of drawing the setup that crosses through the larger halfway back short. So the halfway back short broke, and then you can just come in here because so you can do that on a day like today. You might say, well, that's kind of right in the middle of the range. But two things. Look at the nice trend down that we had. And anytime you are trading within the first 30-minute range, we would expect, if we're bouncing off the bottom of the range, that we trade up to the top of the range. So knowing where the top of the, at this point in the day, it was right at the 30-minute mark, at right here. It was about 7:02 that it set up in the long, and there were still 10 points before we would be at the top of the first 30-minute range. So that's a pretty decent window to work with. And so that's why you can take that setup on a day like today. If the range was, 7 or 8 points, then I wouldn't like this trade, because by the time you would get in, the top of the range would only be, like right here. So you'd barely have enough room to get a first target. So this one traded off its 50% here, came up and broke the high just by a tick, but it was enough to trail the next 61.8. And then when we shot up like this, I just drew the extension from high to high, and then that's where I got taken out here. 41, 80, 50, I think is what I used. And then these highs up here, this was the top of the first 30-minute range, and that's where we saw resistance. I did try and take a short here, drawing it from the triple top here down to this swing low, but it didn't fill me. Came up, touched the order, and then rolled over without getting a fill. So it didn't really roll over that far, but we did trade at the full halfway back long and had a pretty strong bounce off that level after trading there for kind of moving sideways for a few minutes. Right in here, kind of just real tight sideways range, and then pow, and we took off without any sort of next pullback to speak of. So in this case, when you come up and you break the negative 23 and trade up to the negative 61.8, that's when you can start implementing the extensions and drawing high to high, and that's what we're sitting in at this point on the day. When, like I said, we got about an hour left, and we're just kind of didn't really do much the rest of the day, just moved sideways. So one thing I also wanted to mention is that you don't necessarily have to make a ton of trades every single day. So if I pull over my log, and you can find this log in the dashboard, I go down to the bottom. I just wanted to show the summary from the last couple of months. So these are the number of trades I had per month, and then these are the number of points that I deduced it down to, or reduced it to two contracts. So if you divide that number by 2, it's 40 points for the month of May per contract, and only 13 trades. And so if you go up to the May, you can see like the first part of May was pretty filled, but then the second part of May I had a lot of holes, partly because I was traveling and wasn't able to trade for a couple of those days, but also because there just wasn't a lot to do. And so my charts, or my logs, tend to have more holes, and I find that helps me, either whether it's taking a break or whether it's just not trading because there's no setups present. I would rather do that than try and overtrade. And so if I go to last year, pretty similar averages, about 18 trades per month and roughly 65 points. And then so far this year, 16 trade average per month and about 57 points. So pretty congruent with what I had going last year and even in the years prior. I've noticed that my number of trades have come down over the years, but it's not like I was ever trading 100 trades in a week. So it has dropped, but I was never super trade heavy. But I do tend to lean more towards trading less and not taking a trade if I'm not really seeing anything than trying to make something out of nothing. So I think that's a good takeaway if you're ever sitting there scratching your head in a morning session. It's okay to just close down and walk away and come back the next day. So with that, I hope everyone has a great rest of your week. If you have comments, drop them, or questions, drop them in the comments below, and we'll talk to you all soon.